Hello everyone on YouTube. Thank you so much for joining the Stock Martin channel. If you're new to the channel, I ask that you hit that subscribe button, hit the notification bell, hit all so you can get all my videos. Welcome back to another great video. We're going to talk about some charging today, some EV charging stocks, and which ones will do the best in the next year and in the next 5 years. I think you're going to really like this video, and I'm really excited to share it with you. We're going to start talking about this article from Yahoo Finance, which is actually originally from TipRanks. It talks about the two biggest EV charging stocks that there are in the United States, which is Blink Charging and Charge Point. We're going to be talking about the stock moving forward, as which one can have the highest growth and which one will be the best to invest in. Just to give you a little bit of a history, the adoption of electric vehicles is on the rise, and there's a big demand for charging these vehicles, and these EV charging stations are also on the rise. It has been estimated that the EV charging market was worth $39 billion in the year 2019, and it's going to almost triple that by the year 2027 to $101 billion, which is going to have an average growth rate per year of 23%. I wanted to talk about which of these two stocks, Blink Charging Company and Charge Point Holdings, which of these two do the analysts feel that they'll have the biggest run-up in the next year and also in the next 5 years. Looking back at their history, I wanted to share this with you because we can see how they did in the past. Going back all the way from last year, we could see that Charge Point was always doing a little bit better than Blink, with the exception once September of 2020 rolled out, we could see that Blink had a really big sharp increase in its stock price, which has remained high. And during February, when we had all the EV technology stocks selling off, both of these stocks have taken a nosedive. However, as we'll soon see when we evaluate the stock, Charge Point took a bigger hit down than Blink, and as a result has a lot more room to grow up. Now, will this necessarily be a better charging stock in the future? We'll definitely talk about that and see what we find. The first company we're going to talk about is Blink Charging Company, and they provide the EV charging equipment and services, which include the charging network, the charging equipment, and all the charging services. In the first quarter, this company made a 72% year-over-year increase in revenues. However, their loss per net share has increased from 18% in Q1 from a lower of 11 cents per share the same quarter last year. So its losses are increasing from last year. However, according to Blink, the demand for the EV has spurred some government incentives in states like California, Oregon, New York, Maryland, and Massachusetts that are aiming to increase the amount of EV vehicles on the road. Therefore, the demand of EV charging is going to be really big and really there in the years to come. So the main analyst that reviewed this gave the investors 3 main points about Blink. First one is that it is owned and operated, and it installs its own electric vehicle supplies to be a leader in the electric charging infrastructure space in the future. We can see that Blink has, in the last month, acquired a Belgium-based EV charging operator called Blue Corner for $24 million in cash and a stock deal. And this is big for the European EV market, as it has over 7,000 charging ports in Europe. The stock analysts did say that there is a higher concentration of EVs in Europe, and that there is a faster growth of EV sales in Europe, and this could benefit this Blink company. The analyst on Blink added and concluded that we also expect to see more strategic expansion either through the acquisitions or partnerships in Europe, Latin America, as well as in the United States. Our opinion that is Blink is well positioned domestically to capitalize on the expected expansion of EV charging infrastructure within the U.S. to install 500,000 charging stations over the next 10 years. So if they do execute this, this will be very good for the company and very good for the Blink stock. Don't forget that in the United States, we are working on an infrastructure bill and this will greatly boost all these EV stocks if and when this bill comes out. The second company that I wanted to talk about is Charge Point. Is also a comprehensive EV charging network, and it does have charging stations in North America and Europe. In the first quarter, it posted revenues of $40.5 million, which is up 24% year over year. And the company has a loss of 84 cents per share in Q1 compared to 10 cents per share loss by estimated analysts. And this is just because of the high cost of the infrastructure to build these charging stations. For Q2, the company expects revenues to range between $46 and $51 million. For fiscal year 2022, ChargePoint forecasts that their revenues will jump an extreme amount by $195 million to $205 million, which is almost 4 times of what it's projected this year, which will be extremely good with this company. The analyst that reviewed ChargePoint is Roche, and he interacted with ChargePoint management, and he gives it a buy rating and gives it a target price of $39, which is 32.7% upside on this stock. We believe in its in-field experience and multiple learning cycles with customers have enabled the company to maintain its dominance in the US market and outpace the European Union competitors. With a fully funded business model and accelerated EV production schedules, we remain constructive on shares. The big thing that I really like about ChargePoint is that this company offers different kinds of chargers, which include level 1 chargers, which is for retail or investor use, just like you and I. And they also have commercial grade level 2 alternating current charges, which run on 240 volts. And these can be installed in your home or in businesses. And they also have the high power level 3 direct current chargers for fast chargers, which deliver 480 watts of electricity. And this is for urban fast charging. And this is what will charge, for example, the extreme fast chargers like Lucid Motors and Mercedes-Benz. The analyst said that this company foresees a non-home port density of about 15 chargers per 100 vehicles, which is an immense amount of chargers that will be delivered and sold in the United States. This analyst concluded that going forward outside the novel architecture introductions, the company will look to continue its hardware and design approach to improve their charging systems, and it will be the leader in the charging units in the United States. So bottom line, when TipRanks evaluated these two stocks and they based it on the upside potential over the next 12 months, ChargePoint seems to be the better buy. And let's take a look at why. So going into the stock, ChargePoint, if you look back in the past 6 months, it had the biggest drop in its stock. At one point, it was at its 52-week high. ChargePoint was selling at $49.48, and it had plummeted all the way down to its lowest point, as you can see, almost 56% in March, and it tested this base a few times in the past 2-3 months. However, in the past 1 month, you can see that ChargePoint has had a beautiful increase, and this line of regression has given it a 36% upside in the past month, and it continues to increase really nicely. And this can be attributed because ChargePoint announced earlier this week that it will be partnering with Mercedes-Benz and have a partnership called Mercedes Me Charge, and it will allow ChargePoint to be the main charger of electric vehicles for Mercedes, which will be an enormous amount of growth, an enormous amount of volume of sales and revenue for this company. And investors saw that, and that's the reason why you had this really big increase in the past week of 16, let's see, this says 16% in the past week alone, which has been incredible growth in this stock. Now, when we compare that to BLNK going back 6 months, it had a 52-week high of $64.50. However, as you can see, whenever we had the market crash of the EVs and the technology stocks on February 9th, we went down all the way down to about 51%, but then we came back and we were doing quite well and trading sideways. The lowest that we tested was about $26 on May 13th, but it had popped quite back up. And in this past month, we have seen an increase in 19%. And as you can see, in the past week, we've been trading sideways. So out of these two stocks, BLNK has had the highest run up, and it has maintained its stability a lot more than Charge Point, which you could see that the stock went down quite a bit more, but then it has a lot more growth in it to make up for. Now, according to TipRanks, Charge Point has 2 analysts reviewed it and gave it a moderate buy, and they give it a 1.1% upside with a 12-month average of $33.50. The highest target price that TipRanks gave Charge Point is $39, with a low of $28 and an average of $33.50. If we look at Wallet Investor, Charge Point in the 1-year forecast will go to $32, and its 5-year forecast will go to about $41. Now, when we compare that to BLNK, BLNK has had 3 analysts review it, with 2 giving it a moderate buy, 1 hold, and 0 sells. In the next 12 months, TipRanks gives the target average price of $38, which is a 3% downside from now. The highest price is going to be the exact same as Charge Point of $39, with the lowest target price of $37 and an average of $38. Now, looking at Wallet Investor actually thinks that BLNK will outperform Charge Point with its 1-year forecast of $49.50 and a 5-year forecast of $56.75. So as you can see, just reviewing this article and looking at the analyst projections of the EV charging stocks, it looks like it's kind of a wash. You have some analysts that are saying Charge Point will do a lot better, and on the other hand, you have a lot of analysts that are saying BLNK will do a lot better. I think the smartest thing will be to do an average of the two and to be invested in both. But I did want to show one other thing that might change your mind in one direction or the other. I wanted to show you this website called myev.com, and it talks about all the different EV charging stations that are available in the United States currently. The first one being BLNK, and BLNK operates 3,275 level 2 and level 3 public charging stations in the United States. You do not have to be a member to use it, but if you join to be a member, you do save some money on the membership status. The base cost for level 2 charging is anywhere from 39 cents to 79 cents per kilowatt, or about 4 to 6 cents per minute. It does charge 49 cents to 69 cents per kilowatt when you use the level 3 fast charge, which is about $6.99 or $9.99 per session to get a full battery charge. Now, if we compare that to Charge Point, Charge Point is headquartered in California, and it's the nation's largest charging network with more than 68,000 charging units, and 1,500 of them are level 3 direct current fast charging units. So the first time a member uses a station that charges a fee, the company charges $10 to a specific credit card as a balance and then deducts it from the cost from that. Every time the balance goes below $5, another $10 is charged to the payment method on file. So the reason why I bring this article up is who has the most charging stations out there and who has the biggest infrastructure for charging electric vehicles? By hands down, it's Charge Point. Look at this, it has 68,000 charging units nationwide compared to only 3,275 charging stations of BLNK. So this makes a big impact on me and how I would invest. Personally, I think that Charge Point is going to be the leader in this market because it has just the sheer volume and the biggest infrastructure out of these two electric vehicle charging stocks. Now, Blink still does have a good future in it, so I think both of these stocks would be very nice to invest in. However, I would probably, if I was to divide them up, I would probably put more of my money, anywhere from about 60 to 75% into Charge Point and about 25 to 40% into Blink. I think that, again, they're going to be both really profitable companies in the next few years, just because you're going to have a lot more electric vehicles out there on the market that are going to need to be charged. Well, let me know what you think down below. Which EV charging stock do you like the best? And let me know why. I really hope you like this video. Please give me that thumbs up so I can share this video with others. I ask that you please subscribe, hit that notification bell, hit all so you can get all my other videos. What we're going to try to do is get this channel up to a new subscriber level at 500. So I ask that you please share this video with your friends, your family, and your neighbors so we can get that done. Thank you again so much for watching, and I'll see you in the next one. If you would like to help out the channel, down below are two links. One is to Webull. If you deposit $100, you can get 2 free stocks valued up to $1,850. The second link will take you down to Coinbase. If you deposit $100, you get $10 free in cryptocurrency for charging. Thank you for supporting the channel.